Thank you. Thanks for the introduction. So, ladies and gentlemen, thank you for joining this panel. It's about the economy and the aftermath of what's happened here with the last kind of 12 months. We have an excellent group of panelists. They've been introduced, but I'm going to let them briefly mention what their companies are doing very briefly before we delve into the economy questions. So, Junaid.
Okay. Good afternoon, everyone. I'm Junaid Anwar Khan from National Bank of Fujairah. I head the Treasury Division at the bank. The bank's been in operation since 1985 till date, and we are primarily known in the market as an SME commercial specialization bank with key emphasis on certain segments in the market, namely precious metals and diamonds, energy and marine are some of the key segments that we look after. That's been our forte. Apart from that, we're also known within the circle of our customers as a very trade finance focused bank.
Great, thank you.
Hi everyone, my name is Kaia Parv. I run the investment research team at FXPRIMUS. We are an FX broker. We've been in the market for more than 10 years. We take pride in being one of the safest platform out there, and we operate in a number of markets across the globe and offering a number of instruments, anything from FX to some of the crypto instruments, as well as indices and commodities. Thank you.
Thank you, Arif.
Okay, my name is Arif Alawi. I'm the founder and CEO of Dubai Cultivate, which is an investment firm established in the IFC. Our main sector focus is technology. Basically, we established our first technology fund, which is focusing on a growth stage technologies. We invest in all different type of subsectors of technology in healthcare, education, logistics, and name it. So this is our first fund. We've been in business since 2018, and we're doing fine.
Good afternoon, everyone. My name is Nasha Afshar. I represent Parasol Capital, and we are a multi-family office which works with high net worth individuals, and we take care of multi-asset portfolios, predominantly equities, ETFs, fixed income, structures, and hedge funds. Essentially, we've been around for 2 years and look forward to continuing in the region. Thank you.
Great, thank you. I think we have pretty good spread of different segments of the industry here: bank, broker, venture capital, essentially, and more on the asset management side. So I'm going to delve into the first question immediately: recovery, and kind of what's the best way for economies to recover? And the question is, how well have others done? There's a lot of talk of China, and you know, just what is the best way out? I actually wanted to ask Kaia first, because I know you're a little bit specialized on this stuff with China as well. So what's your thoughts on that?
I think that post-2008 crisis showed that just monetary stimulus is not enough. What we're going to get from monetary stimulus is asset price inflation, not much of trickle-down economy as the theory was at the time. And when we had the preparation call, we spoke about China predominantly. And China is one of those sort of very strategic countries that think about what's the industries of the future. So what China has done with their 14th five-year plan is basically identifying the key industries that needs to be focused on. And there's clear focus on green energy. There's focus on procuring resources, securing supply chains, for instance, and also making sure that you boost sort of the domestic markets. So looking at China's actions in 2020, China procured about $500 billion worth of resources, so they are very well positioned to build out their electric vehicle charging stations, the batteries. I think the Western world is maybe one step behind. We see the fiscal plan coming out of the US, coming out of Europe, but I think the Western world is a bit too late now. So now Western world has to buy all those resources with almost 300% at the surplus, looking at, for instance, copper prices. So just to come back to the question, I think what we need is a combination of monetary stimulus as well as fiscal stimulus. But it has to be strategic. So it can't be just pouring money all over the place, as we've seen maybe in the US with the stimulus checks. You really have to target it and make sure that the country is ready to face the next decade and the industries that are going to dominate.
Okay, that makes sense. Junaid, what's your thoughts on this China and how they're getting out? Is that the recipe for everyone? And what's your thoughts on that?
I think if you look at China, and for that matter, if you compare any other nation,
Maybe turn it on and off.
I think China's blueprint could not be an absolute recipe for every other nation, because every nation's demographic makeup, your strength, your forte within what you bring to the global stage from an economic perspective is different. So you have to split your strategy into three parts: your short term, your medium term, and your long term. So each nation, as it comes out of the pandemic in some form or shape, the first and most immediate action is a decisive acceleration of vaccination program across any country that you look at, so that you are not left behind in the race that who gets vaccinated the most. That's first and foremost. Secondly, you hone in and you focus back on the core strengths of your economy, which were your bellwether industries before the onset of the pandemic. You ensure that they start contributing back towards your economy the way they were before the pandemic set in. Then you focus on your medium-term strategy, and the areas that you could focus on partly have been mentioned here: technology, medcare, education, green initiatives. These should be spread between medium-term to long-term. And for that, nations that tend to have issues with politics and bureaucracy, the leaders of those nations have to look a level above that to ensure that, like China, if you cannot develop a 45-year plan, at least have a cohesive, unified plan for perhaps 20 years or 15 years, which will not be derailed simply because a new political party has come to the stage. This is the same malaise that you find in the EU, wherein something very basic at times on monetary policy and on Medcare cannot be agreed upon between the nations, and you eventually have the UK saying that, you see, that was the reason why we left, that was the reason for Brexit. So you just create the recipe for other nations to think that if we want to be more dynamic and resolve our problems, perhaps we need to have lesser bureaucracy. So for the EU, it's extremely important to be far more assertive, far more agile in their approach. The US is doing all that it could do. So in the form of stimulus, assisting people who've lost their jobs through various payout plans, which will go ahead for the rest of this year, lower interest rates, asset repurchase programs, all of that, not all nations can do. Some can do to a lesser or greater extent, but what all nations must do is bifurcate the strategy between short, medium, and long term. That's absolutely important.
Yeah, makes sense. Arif?
Yes, I can extend what Junaid said. That the experience of China is, I think, you cannot replicate it in other countries because of the monarchy, because of the system of the country is governed by one party, which is the Communist Party, and they decided to lock down during, for example, they started in December and they opened the lockdown opened in April, I think, 2020, and during that time, I mean, everybody, all the government entities, all the companies were strict to those rules for the lockdown. As he said, also they want opposite what the US, that they instead of increasing the tax, they reduce the tax, and they give incentives to companies. They focus internally as focusing more into the Chinese economy. Like instead of focusing like globalization, they want opposite, to refocus on the country and the technology specifically and the healthcare sector. And they were very successful in that. And maybe in some areas of these like success stories you can benefit on. But in terms of like systems in the world, in the Gulf today, we can say we're much better off than a lot of European countries. It's the when you take the decision, or when the government takes these decisions, is the decision maker is one entity or there are several like involved, like in Europe or in US, and it affects a lot. So it's when you talk about the economy, it's completely correlated positively with the health as a system. So health goes up, the economy goes up. So
I guess the economy just benefits from this fast process of decision making. It's sad, right, that the more democratic, I guess, it is, the less, the more difficult it is for the economy, I guess. Nasha, what's your thoughts on this? China, I know you would probably like to talk about Australia, but
Sure. No,
China's doing very well, right, compared to everyone else?
I think the three panelists did a fantastic job, so I might piggyback a little bit, but then add something to it. I think firstly, having one government without too much democracy, which always leads to bureaucracy, regardless of its positive intent, leads to delay and then leads to negative economic value, in my opinion. And I think that if you look at the trade war, take it back a little bit before 2020, China was testing the waters, and then, as Arif correctly said, they went very internal with their economy. And they can afford to do that. Same to an extent like a country with the population of an India can do. So they have that comfort, whereas another country with a population of 20 or 30 million can't do that. Secondly, I think if you look at the One Belt project, which is a very long-term project, that's something China's doing very well to ensure that it has stakeholders in other parts of the world, something the US has been doing for a very long time. And I think that's a very, very interesting theme that not only has existed, but will continue to exist. And for me, on the technology side, they grow their own solutions by firstly, politically saying, gaining inspiration from US solutions, and then they take it a step further and they innovate with applications such as WeChat and things like that, which become holistic platforms that provide full financial solutions, which is not something even we've seen being done out of the US, which has traditionally been the innovator in the tech space. So I think China will continue and already has in many ways superseded the technological solutions out of the US, and due to this lovely thing that's always in our pockets, they will continue to get more market share over time. I mean, if you look at, and forgive me if it's a rudimentary example, but if you look at TikTok, it's ingrained itself in our lives in the last year and a half, and it didn't even exist before.
Never heard of it.
You never? Okay. So I think ultimately, as the panelists said, it's having a government that can act swiftly without bureaucracy. It's having a very large populace, and it's ultimately, in my opinion, gaining inspiration on the technology side and then iterating on those solutions. That's why I think their economy is very robust. And also, they were the first country to be hit. So sometimes, not a first mover advantage, I wouldn't call it that, but they had time to recover, I would say.
Yeah, I mean, astonishing numbers from there, right? They had a growth, their economy grew during the pandemic, and
Correct.
They didn't have many cases of corona either, right? It's a bit of a miracle.
Officially.
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 So, but you mean the growth number or the
No,
pandemic
I mean
number?
the number of cases.
Number of cases. How about the growth numbers? Is that officially?
From statistical perspective, if you look at China's growth numbers, always grows on a very gradual basis. Anyone who knows statistics knows this is not possible. So most likely there's a bit of, I don't want to say manipulation, but let's just say maybe adjustment of the numbers. But nevertheless, there's no doubt that China is expanding, and they were the only large economy to grow in 2020, as you mentioned. So
I think in 2020, the growth was around like 1 to 2%.
2.3, I think.
Yeah. And the first quarter of 2021, it was a V-shape, like it never happened. And it's more than expecting between 7 to 8% growth. So they're moving forward.
Yeah. Did any other country have a positive growth during this pandemic?
I think Vietnam, but again, a tiny
small
country.
countries, yeah. So no major economy grew, except China.
But the US is slated for 2% GDP this year, combined with 2% inflation. So I think it's interesting, but it's not comparable to China at all. No.
Since you said inflation, let's talk about inflation. What's the numbers? Interest rate, inflation, what is the latest numbers? Does anyone have, Kaia maybe, do you have some numbers on inflation?
I mean, CPI data in the US printed, I think, 4.2% year-on-year basis, core inflation 0.9% on month-to-month basis. But looking at where the sort of inflation is concentrated, it's the cyclical sectors. So used cars, for instance, sports events, those are less than 10% of the economy, which means the residual 90% didn't really have that inflation. And looking at CPA composition, 30% of it comes from shelter/rent. I think there was maybe 1% increase on median rent in the US. And taking a step back, when we talk about inflation, inflation is a durable increase in a price level. CPI growth at this point is just one-time price shift, which is coming from distortion in the supply chains and this sort of pull forward demand that we're seeing. I think until we have a few periods of increased, let's call it CPI again, we can't talk about inflation just yet. But I understand why the markets are scared. I mean, the number looks big, right? So a bit of reaction is only normal, despite the fact that the Fed brought up this average inflation targeting already back in September during Jackson Hole conference. So it's a bit of surprise that the markets are surprised.
Junaid,
Yeah,
inflation.
Well, I think if you look at from a layman's perspective, a headline number flashing on the screen showing 4.2% annualized, 0.8% month to month, ex-food energy at 0.8 month to month, annualized 3.6, energy price north of 25%, and used car and truck sales plus 21 and 10%
That's a lot.
respectively. So again, imagine that a common person opens up CNBC or any other news channel or on your handset, and you see those numbers. Immediately, your mind would go back and think that inflation actually is going or accelerating well beyond most expectations. So the Fed and the government should do something. But on the contrary, and rightly so, the view held is that we are in for what is known as a base effect, which is that from the base of last year to this year, there will be this transition because you're coming off extremely low and even negative numbers. So this to be neutralized will take a few months, probably 4 to 5 months, before the actual picture of inflation becomes clearer for the analysts and market participants to make any informed decision about their current or future investments. So the Fed perceives that the average rate of inflation on a longer term and medium term perspective, their target would be north of 2%, and that's where they foresee the rate to achieve or arrive at once the baseline impact is reduced. So the existing numbers should not cause a great degree of panic. What is important to note is as follows. One is the labor force participation rate in the US under the NFP is extremely important. Have an eye on that, because that has been between 62.4, 63.5 range for the better part of 5-6 years. If that starts creeping up to 65, 66%, that's a red flag.
Sorry, what's that number?
It's the labor force participation rate. So when you watch the NFP that comes out every month on the first Friday, you have the headline number which everyone knows of. But when you look at the Fed and the way the constituents of that figure to which the Fed looks at, they look at two prices. One is the wage growth as a percentage month to month, and the other is the labor force participation rate, which has for the last 8 to 9 years has been stuck between 62, 61%, and on the high end up to around 63%. If this starts challenging 65%, 66%, then the Fed will start taking serious notice. And the other is annualized wage growth, which has been very modest for many, many years, going back to 2008, 2009. If that starts going up significantly, then the Fed will have to rethink its strategy on inflation, because 2/3 of the inflation in the US is wage driven. So when wages go up, then you're looking at a medium to long-term impact of inflation. Right now, the Fed, and broadly speaking, many market analysts and participants view the inflation to be transitory, which means that by the end of the year, you're back to 2% or something shy of 2%. But if you have higher wage growth and you have higher labor force participation, you're looking at sustained inflation, which means that the Fed might think of preempting and doing something on the monetary side. Number one, either by raising its or bringing forth its forecast to raise interest rates. And secondly, they might even start working on reducing its asset purchase program. Those are very two important factors from a market perspective.
Excellent. Nasha, a lot of money has been printed, right? Huge numbers. What's your thoughts on that? I mean, I heard some numbers. Do you have the printed numbers some of you guys might know? It's huge, right?
it's a bit criminal, but I can't remember it off the top of my head. But I know that if you look at the M1 money supply chart, it's parabolic, so it's a bit concerning. I think there are benefits to why the US does it. Number one, some of the largest holders of US debt are obviously outside the US, sovereigns such as China. Secondly, it's an easy solution to stimulate the economy, but in my view, it's not necessarily the right solution. I think it's just kicking the can down the road. And as the panelists said, you do increase inflation, but it's not a surprise. I mean, they printed the money already. They're going to continue to print it. But again, I'm not a big fan of it personally. I think it's better to look at more structural solutions. For example, I think it would be more beneficial if there was an emphasis on helping small businesses, because that helps drive employment. But again, I don't think that's something they've been focusing on. They just want to helicopter money, so to speak. Which I don't.
How much have they printed, Kaia? Do you know the number?
They've poured more than 5 trillion since the beginning of the pandemic into the economy, about 1.3 to be raised within the next 2 quarters, and that is not inclusive of American Jobs Plan and American Families Plan, which are the two Biden stimulus policies.
So
it's insane amount of money.
Trillion. Is that much more than usual? Like, is
It's
it
much
10
more.
times more than usual, or?
I mean, define usual again. I mean, pre-2008, I think the Fed held maybe 5% of sort of GDP. Now, these days, it's about 25% of GDP on their balance sheet, or as sort of holdings of federal debt. It's huge, but again, talking about the foreign central banks, the holding has been increasing. It dropped March 2020. It's been increasing, but on a percentage basis, it's actually going down quite a lot. So meaning US is financing itself. The financing is not coming from abroad anymore, and that's leading clearly to the double deficits that we're also seeing in the US.
Correct, but the beauty of it is, if I control the lever, then I can determine how much my debt is worth. So if my debt continually decreases in safe haven value, whether that be gold, CHF, JPY, maybe eventually yen, then I think I'm benefiting myself, which I think at a high level is a conflict of interest, but not an easy solution to that.
I don't think it can continue forever, to be honest. I mean, I think looking at dollar right now, I mean, dollar is now 3 years low, right? So I think that's perhaps a reflection of, you know, a bit of distrust, I would say, in the Federal Reserve Bank, because at this point, monetary policy is completely unsuitable for the economy. I mean, economy is running red hot, and yet it's the most loose monetary policy we have seen in a long time. So I think the Fed at some point needs to take some sort of action.
No, correct. And I think it's something you would have read about, I'm sure, which is the value trade, which is there's been a big rotation out of tech and growth stocks into value. And this is subsequently the biggest driver behind that, because people are concerned. They want to hold defensives, utilities, companies that pay dividends because they're worried about the US dollar. But they always say that when people talk about it, that's the worst time to do the trade. But anyway.
Too late.
Sorry?
Too late to do the trade.
Correct.
I think one thing we must all, sitting here as market participants and those who offer services to other participants, is that if you go back to 2013, 2014, you had what was known as, or is now known as, a taper tantrum. That's when there was a degree of fear in the market that the US will literally pull away all its asset buying program, and then the markets will be left to fend for themselves, and that could lead to a liquidity crisis, not necessarily in the US, but outside the US, because of the amount of dollar-based funding needed by nations and companies outside the US. So as we now slowly but gradually come out of the pandemic, depending upon which country you look at, so let's look at the US. The biggest challenge for the Biden administration will be how and at what pace and at what time do you slowly start taking the money back from the public, which is that we stop paying to those people who have lost their jobs, number one. Number two, at what pace do we stop buying securities, money market securities issued in the US, plus corporate debt? So that has to be a very gradual process. If they apply a handbrake process of suddenly declaring that on so and so date we will cease all operations, or we will drop it down to 50% and then make it to 0% at some stage, that will cause massive volatility in the market. It has to be a very delicate exercise of gradually. So the injection of liquidity was sudden. The market needed a sudden reaction. the withdrawal of it has to be a very gradual affair so that you do not leave behind a state of panic, and then what we have not seen till now, like a huge meltdown in the equities or the bond market, that should not happen. But if you apply a handbrake approach, the possibility is you could then possibly see a meltdown in the bond and in the equity market.
Yeah, I think the printing story sounds scary, and it's big, and it's a lot of money being printed. Arif, like, it sounds like it's scary in terms of inflation, right? So the people you talk to in this region, the Gulf, Dubai, I know real estate is going up huge amounts because people expect inflation. That expectation is maybe also a bad thing. What do you see here? Like, what's the investment story? Is there alternative investments, or inflation and investment? What's the link there? And
Well, in the Gulf, it depends on the markets. Like if you talk about UAE and now the emerging market, which is Saudi Arabia, they are taking different measures. And take an example of the UAE today. The real estate is like in some sectors, like in residential, is booming again. The price is like inflated by 10 to 15% in some areas in the UAE, especially talking about Dubai. In terms of investors' appetite now, the new generation, they are looking for something different than the classical investments, which is the real estate and the public stock markets and bonds. And
they're looking for TikTok, like Nasha, TikTok,
yes,
instead of real estate.
Yeah, so, and gladly that a lot of these families in the Gulf that we have also witnessed, even in the DIFC, have seen a lot of family businesses, family companies, they opened up there, which are currently, they're literally competing with wealth managers. So lots of wealth managers, they are losing the cash. And it's going back to these like small family businesses. The new generations, they are running their own, and they are competing with even with venture capitals, private equity. So the new trend is basically towards making the high revenue, or basically high margins income, which is today they have seen a lot of companies in the technology, especially in the light assets. We're talking about the applications. So the trend is going towards this, and a lot of families, they have allocated part of their wealth and basically given to the third generation to basically to be part of this, like the growth strategy. So the momentum or the growth in the new sectors, the alternative investments, I think it's growing very fast in the Gulf.
And that's where you guys are in, right? The investments rather than the traditional stuff.
Yes, we have seen, I mean, since we started in 2018 and when we received our first funding in April 2019, we started our investments. First was basically in the fintech, which is tomorrow's session. I don't want to burn it, but the technology sector is booming, and what we have today, like we have gone through a lot of like filtration of the subsectors of the technology. I've seen a lot of international companies, they're coming into the region here. And we're talking about Dubai, Abu Dhabi, ADGM, and then now Saudi Arabia. A lot of VCs, they started in Saudi Arabia. Previously, you can see there are less than 10 companies. Today, we can say literally between 30 to 50 companies. All new VCs, well-equipped, well-organized, and they're competing in the market. And basically, they are creating noise in the market. So we are working with a couple of these VCs to collaborate and go co-investments rather than competing not to kill the valuations, basically.
Yeah. Great, thank you. I want to come back to something you said, Kaia, about US handouts, and they're giving a lot of money to also all sorts of people, the family story, and the printing and giving money out to a lot of people. So is the US changing fundamentally? Is it becoming more socialist, like, let's say, a bit more like Europe?
I think that is the trend. So as was mentioned earlier, US, although the unemployment rate has come down, the labor force participation rate is also down. So it was about 63.5, let's say pre-pandemic, versus 61.7 at this point, which means there's still about 8.5 million people who are either unemployed or underemployed in the US. Without wage increase, we are not going to see inflation, coming back to that particular topic. So I think the government realizes, as well as Federal Reserve Bank, that in order to avoid, let's say, disruptions and a bit of friction in the society, they need to continue giving people money. And you know, there's nothing more permanent than temporary government programs. So I have a feeling that we are going to continue seeing these handouts. Yes, I think the short answer is that US is becoming slightly more socialist. The recent proposal by the Biden's government to have American Families program, which is a $2.25 trillion program, that is the biggest change, I would say, the biggest federal entitlement program in at least 55 or 60 years. And this program proposes permanent spending increases through free college, free healthcare, no, sorry, not free healthcare, I should say free childcare. So yeah, the fabric of US society definitely is going to change if this plan goes through, and I think it will, because Democrats are going to use reconciliation process in order to push it through.
Junaid, do you agree? Is it good for the dollar as well, this story?
I think Adam Smith would be turning in his grave.
Sorry, who?
I mean, the famous capitalist economist, he would not have envisaged that there would come a time when the nation, which was meant to be the flag bearer of capitalism, would have to move towards the socialist club. But what we're seeing now is a policy on a no-choice basis. It's not that fundamentally they have changed their mindset vis-a-vis on how to run the US economy. It's just the environment, the conditions that have played themselves out since February of last year have forced them to be more active, be more assertive, and come to the distress call of the average American and the challenge they face in living a decent standard of living. Now, is this a permanent feature? I believe not. We are in the middle of a democratic government. The Republicans, when they come to power, if they do in the next election, might have a different view on things. And as I mentioned earlier, that at some point, from a balance sheet management perspective, because historically Democrats have always been associated with better balance sheet management compared to Republicans, you would see a gradual, if not a complete, removal of this program. There will be some remnants of it, as was just mentioned now, that will be left permanent, but a new government, which is non-Democrat, meaning a Republican-led, might come in and then try to have new legislation passed that tries to undo some of these socialist measures. But again, that's 3+ years down the line.
You think Trump is coming back?
I mean, if albeit for one reason, I would have loved to see him back, because we still yearn for volatility. We missed his Twitter messages, because ever since the new president's come to power, we've not seen literally any major activity, at least on the FX market.
He doesn't tweet. Biden doesn't tweet.
He doesn't tweet, and he's very passive in that sense, and he is a very traditional style politician, as you would see. But coming back to that point again, socialism, as we've seen it in the European Union post the 1920 International Conference till date, I mean, if you take glaring examples of the Nordic nations, not in that sense, no. Some remnants of its answer is yes, because Medicare has always been under the radar and come under a lot of scrutiny in the US and the way it's handled. So the pandemic has brought to the fore the question that there should be some degree of responsibility placed on the US government when it comes to looking after the hygiene and the overall health of its citizens. So some remnants will remain, but by and large it will continue to be a capitalist economy. One last thing before I conclude, I would say, is you have to bear in mind, going forward every 10 years from now into the end of the century, the pace at which you are able to grow more jobs for the number of people that are coming out of colleges and universities will become more and more difficult, because the degree of automation and robotics being used in various fields of what we see as professions will be so glaring that there will be constantly a challenge to find and create jobs for the generation that's looking for jobs. So the reliance they will have on the government to help them out through that difficult period will be even greater. So for a country like the US, going forward every 10 years till the turn of the century, this will likely to be a challenge, and this challenge will be played out across the globe.
Asha, did you want to add?
Junaid, I think you made a fantastic point, and I think it's a, I don't have any children today, inshallah, eventually, but I think it's a very real concern, which I tell any of my younger friends. There was the era of industrialization, then there was, we had technology coming in, and Silicon Valley, internet, etc., created a lot of jobs, but automation, to me, doesn't participate in that story. But I'll take it a step back. So I think if you have a continuation of this government, I think there's a very real likelihood, maybe not in the next election cycle, but we're heading towards a UBI, a universal basic income. But if the Democrats, if the Republicans get back in power, no, we'll go back to good old capitalism, and it is what it is for those who can't make it, survival of the fittest. But I think UBI is very real. I think printing money and taking care of people without jobs in challenging situations, it's all going to be used as examples of why it's a good idea to use UBI. And the irony of a UBI is that it's actually going to create a glass ceiling for many demographic elements of society, not just in the US. And I think it's a global issue because you're absolutely right. Unless we adopt a one-child policy like the Chinese did, you're going to end up with, which I'm not an advocate for, you're going to end up with a lot of people that are just not qualified to do anything needed in society. And some areas may not be automated, and I think Arif would be much better than me to comment on that because he's closer to the fintech and tech sector. But I don't want to be served by a robot when I buy a coffee. But outside of that, there are many things I'd be happy to have automated for me. And I think it's really scary, but that's a discussion for another time, and I'd rather stay positive. But I think your point, Junaid, is fantastic. And I think that instead of focusing on giving people money, you should educate them and make them valuable. But that I don't think is a feasible solution seen by many politicians. For example, you had, I think it was Bernie Sanders who used to say that, we should provide more community college education. No tier 1, tier 2 company wants to hire someone educated at a community college. You might as well just use Udemy or some other education platform. So I think there are many issues that tie into it, but I think that printing of money is not a solution, but it will continue in this current government.
Yeah.
I have one comment before you go for the next subject. Is there's a good example about lots of countries that they have an element of socialism into that system. To give an example, in 2008, when the financial crisis happened, and the government, U.S. government, they bailed out the major multinationals like Lehman Brothers, Blackstone, and J.P. Morgan, and the billions of $800 billion. So each company got like $40–50 billion. So it's basically, this is sort of a socialism.
It is,
so
yeah,
there's an element. Yeah.
Bailout happens a lot.
point.
Even in this part of the world, it happens, right? Bailouts.
Everywhere, yes. Yeah. So there is always an overlapping. Like even today, if you're talking about the China is a communist, but the practice is capitalism today. Even the system is still is there, but previously, 15 or 20 years ago, you see only the government companies there, government owned. Now, maybe 70–80% of these companies owned by foreigners even, the US companies.
Yeah.
Yes.
Kaia.
Very true, very true.
I was just going to add that, of course, making sure that the people in the country are equipped to work is critical, and a great example would be Singapore. So, for instance, whenever a large company is planning layoffs in Singapore, they always need to go to the government first. What the government does basically provides funding for the retraining, identifying the sort of areas where people should be working, and they sort of just push the workforce that direction, and I think it's brilliant. Of course, we can't compare a country of 5 million to US, which is 320 million, but nevertheless, I think that should be the plan, that should be the goal of the government, instead of just giving money to everyone. And I think until we have a bit of more political cohesion in the US, these type of programs are extremely hard to push through. But I will debate the point that perhaps next Republican government is going to go back to capitalism. I think it's extremely hard to take away entitlements from people, especially now that we are seeing a lot of, let's call it civil unrest in so many different economies. And yes, we can maybe point fingers, perhaps it's more about the racial problems. I think these issues have started to emerge much earlier, and clearly the post-2008 unequal recovery is a big factor.
I think we all agree then that the recovery is here, it's growing, there's inflation, there's growth, and we're out of the woods, kind of. But then in the middle of all this came the big crypto story where Bitcoin and all this stuff is going up, which I have to relate to economy a little bit, because suddenly we have record numbers of inflows of funds, record amounts, cryptos, Bitcoins. What's your views briefly? Is it really a financial, is it a payment method? Is it like a art dealer type of product? What is it? Are you, briefly, each one of you, do you believe in this Bitcoin story for payments, or is it just an investment? Is it a very alternative investment, like Arif talks about alternative investment? Is it an alternative investment?
See, what you have to look at is the historical perspective of the last 700 years. Before that, I mean, in Roman times, salt was used as a medium of exchange. In Japan, for a brief period, they used rice as a medium of exchange. And for a large part of human history, gold and silver was used at a medium of exchange between civilizations. It took the ownership of the governments and individual countries to introduce banknotes and replace the method of using gold or silver as payment with banknotes. That had its own history, but the ownership was with the governments. And then came the bonds. Fast forward to the present. You talk about cryptos. Go a few years before that, when we had the replacement of standardization with gold and complete liberalization of FX markets, where each currency competes with the other, again was a measure taken by the governments. For cryptos to become a mainstay for the future in terms of payments, the ownership has to be taken by the monetary authorities in the individual countries.
Central powers.
Exactly.
But central powers don't like decentralized.
That's the problem here. If they had first sat together in a hall somewhere and come up with a cohesive plan that we will introduce a new method of payment which will do away with the use of the method which was in force for the last 100 plus years, then you'd see the acceptance of that to be much better compared to what we see now.
Okay, Nashar, briefly. Sure. Is it a payment? Is it money? Because you have unlimited, like air mile tokens with unlimited number of coins out there. Is it money?
I hope it doesn't get me in trouble with you, but I'd have to correct your statement. It depends on the underlying token. Some of them have an element of infinite printability. Most of them don't, though, to be honest. I think you have to take a look at, I think Junaid's solution is a logical one that many of us would adhere to, but the seed, as it were, of the inception of the original one, which was Bitcoin, was a almost rebellion against the current mature existing financial infrastructure. So suddenly if you have the rebellious types and you want to make them work with JP Morgan, or you want to make them work with DFSA, ADGM, FINMA, SEC, I think it's not going to work overnight, and I think there'll always be that element of rebellious relationship. But I think in terms of, is it just a currency? No, it's many more things than a currency. You have NFTs, which represent non-fungible token, which represents an ownership in a piece of art. So I would like to expand, but unfortunately due to time, it's challenging. You have it used as a fuel of sorts for supply chain. A very simple example is that, let's say you go to purchase a good in a store, and you wanted to understand the origin of the good. Well, a blockchain is immutable. Subsequently, the details for that particular good have to be factual and then cannot be changed from there. So I think that's and it's very useful in the to avoid counterfeiting of goods, such as in luxury or wine or things of that nature. And I think ultimately, yes, it is here to stay. But I think if there was a coordination of every monetary authority globally, which I think is not even a tail risk chance of happening, that's the only way to stop it. But
Arif,
in reality, yeah, I think it can't happen.
is it money? Do the central powers in the Gulf region see it as money? I don't think so. I think they see it as some kind of investment token or something. What's your view on this?
Well, my point of view, it's not a currency, first of all. It's sort of a medium, like any other, as you mentioned, ETFs, or could be like a bond. Or it's an instrument, it's used. But I think if you want to consider it as like lots of people, like lots of economists saying that it might replace the fiat currency. I don't think it will soon, because you need a regulatory for that. You need courts. You need people to refer to, you need the ownership of these, and you need the asset. There is no asset backed in these. So you're buying something in the air. You're buying based on supply and demand. There is no economics, no fundamentals, nothing behind it. So you're basically, I consider it's more than gambling, because gambling usually, it's a 50-50. You see the product, you see the partners.
Some
cryptos,
people argue
you don't see
even gold are like
all the
gold is like
variables are unknown.
Yeah.
So basically you're putting you're giving somebody like a currency in the dark, and you don't know who's the other guy.
Kaia, what do you think?
I think crypto's definitely not money as such yet. I think the use case is dynamic. We're going to see the effects maybe in the near term. However, digital currencies very much a thing, I think, for the next 5 years. China is already running test cases of about 100,000 people with digital yuan, which has expiry date, by the way, which means that you can effectively inject money to certain parts of the economy, say if you have some sort of crisis or you have some sort of natural disaster, and you can entice people to use it within a certain time period. So I think that's going to happen really, really soon. The Fed has said they have to go through Congress in order to implement. Lagarde has said maybe early as 2024, but I think within the next 5 years we're going to all have digital currencies in our wallets. But in crypto space, the fact that one person's tweet can wipe out 25 billion worth of market capitalization is a clear indication of market peak.
Yeah, that's a problem. When someone can tweet your money away, that's a problem, yeah. But that can happen with any currency, I would say. Almost.
Not quite, I think, to the extent if you think about maybe the capitalization that was wiped out versus the underlying capitalization. So that is very much an indication that we have reached sort of peak when it comes to cryptos.
But I would add that that person also tweeted to make it go up 25 billion in capitalization. So it's not a healthy characteristic of a asset that you'd want to hold in your portfolio, which I totally agree. But I think that you're also going to have a whole generation, I think Gen Z is how you correctly refer to them, which is a very big fan of this asset class, regardless of the volatility. So I'll be interested to see how they proliferate that through the next economic cycle.
All I'm going to say, I think cryptos are a call option on future. So somebody who's maybe in an earlier stage of their life should have some sort of allocation. Just for the sake of it, you don't know what's going to end up, how the monetary system is going to develop. So putting some sort of allocation in the portfolio into crypto, I think makes perfect sense.
But I would also argue for mature investors, dollar cost averaging into Bitcoin, because if people like Paul Tudor Jones, who's been a hedge fund manager successful since the 80s and still continues investing, that tells you a little bit about the underlying, in my humble opinion. Thank you.
Great. I think we covered it. We've run out of time anyway, so if anyone has a quick question, we have time for that. Otherwise, let's go for lunch.